let's hop in to PayPal and see what's going on. It's actually gearing up for a move. And so right into earnings. So I think there's a pretty good butterfly sitting here. So let's take a peek at the chart. If we take a look at the weeklies, we can see we're caught between about $71 and $65. And so we expect to expand out of that range fairly well. And so we should expand either back up to 78 or below to 79. Now, seasonality tends to show this one as a little bit negative over the next month or so. So let's go in here and have a look. So we can look at November. It really tells us that the short sort of ends around October 29th, and then it has a little bit of an upshot. And so if we want to take November's because it's a little bit cheaper, we might be able to see price action that we need to take off in a bit of a tranche. Maybe it bounces right up after earnings and then gives everything back, or maybe it fades down into earnings and then gives everything back. And so my thought is the 65-60-55 butterfly on the put side, and then the 72 to 77.50 to 82.50 on the call side. So here's the majesty of this. Because it's sideways and the pocket is so big, both parts of these butterflies can work. What you want to look for is the savage dip down to cover the put side, and then you let the call side move to the up to a recovery. We actually did this in Micron because of this price action. It really worked out very nicely because we took both sides of the formation and we said, hey, listen, into earnings, let's take a call butterfly and a put butterfly. It came in past earnings, gave us that butterfly. The put butterfly gave us money, and now the call butterfly is still working on that edge. And I think PayPal will do the same thing for us.
Okay.
All right. The next one you had was CNC, correct?
Yep.
Okay. So this one's been in a bit of a sideways channel for a bit. And if we look at a 10-year formation, we can see that this sideways pocket really gave it a lot of trouble for almost 2 years, right? Half of 1 year, an entire year, and then another year as it breaks through the top. And what it looks like it's doing is rotating back to the upside. Again, this is before earnings. We have buyers that probably came in at around 40 and then said, ruh-roh, and then left. And now since that last earnings event, it's trying to hold the bottom, and it's outside of this candlestick that's very big, but also outside this candlestick that's carrying the most volume. So this looks like it's got an upside draft, and that upside draft could take us 40, maybe 45, depending on what the chart has going on. But essentially, you could look at both areas doing something into the earnings event. And that earnings event is on the 29th of October. I forgot what seasonality said. Hang on 2 secs. Whoa. This one's got...
we don't get many woes regarding seasonality.
Yeah, this one drops off a cliff into the latter part of... yeah. So this one could look pretty good, actually, on an upside rotation in terms of carrying things back. The question is how long you want to hold it. If you say to yourself, hey, why don't I ride the seasonality train into December, you could use the 3750. That one might be a little bit expensive, to 4750 to 5750, and that's about $1.55, but it's got $1,000 upside there if you want to ride it straight into seasonality. So it's got let's see if we put this at 90 days, what it gives us. Yeah, it doesn't have a bad framework right there. Now, if you're thinking, hey, let me trade both sides of that, let's say it has a dip into earnings, or let's say you want to trade this to the earnings, you really could try November. It doesn't go up that far. Okay, so 3750 to 45 to 50. That's going to give you something that's net positive, because if it runs right over 45, you're still going to have $2.50 to the good. So this butterfly is unbalanced in the favor of the call side.
What if we tried it with the 40 and balanced it out a little?
Okay, so
instead of the 37, just the 37 and a half, instead of that, what if it was 40, 45, 50?
Yeah, there you go.
See, that to me seems like just the pricing makes it more appealing to me.
Yeah, absolutely. Absolutely. You can certainly do that. If per happenstance you think, well, maybe it retests 30 before it heads up there into earnings, right? So notice we had 2 weeks of downside flow, and then it moves up. You take the end of the November event. It should do it for you. But you could easily say 30 to 25 to 20. And that gives you an opportunity for both sides of that to look pretty good, because it definitely has got it's got some vol, right? It's got a fair bit of vol.
It does. And ever since the whole like healthcare fallout thing with United Health and the other stocks that it's bled to, I feel like these chains are traded more as well. So I think you're gonna have plenty of volume to help you with this.
Yeah, absolutely. Absolutely. The last one I want to go into, if we have time, I can go really quickly, is...
We got 3 minutes here because we do have Paul coming up next.
Yeah, no problem. We can look at Next Energy. And so either these guys are going to have themselves a fade to 70, or they're going to get up to 80. And so again, this is another one. Earnings coming 10/23. And so this is another one that could have a whipsaw that will give you both sides of the equation to trade. And I'm seeing a lot of formations that look like that. And so if we use November, we can see the 70. Whoopsie. We can do the 70, 65, 60, which is 46 cents, and then the 80, 85, 90, which is 56 cents. So a little bit over $1 for that one. And I think it's going to have a fair bit of legs if it actually does what I think it ought to do, which is whipsaw in both directions.
Okay. And then basically you would just take them off as it moves in your favor.
Yes, exactly. If it comes way down, you cover the put and you wait for the call to recover.
Oh, man.
If it goes up, you take the call off and you wait for the put to recover, because the overall formation is a gigantic sideways pocket.
Yeah.